All right. Thank you, everyone, for joining us. We have a lot of people still piling in. We'll get started here just in a second. And I wanted to thank my team for putting this together today. We've got a really exciting presentation, and we'll be going over some market fundamentals. We have a special guest today. Steve, the CEO of Algorand, will be joining us, and some of our regulars, including Dr. Garrett Heilman and Charlie McGarraugh, for a deep technicals overview of what's been going on in the crypto markets. So without further ado, my name is Nicholas Carey. I'm the co-founder of blockchain.com. I'm the author of The Future is Decentralized and the founding commissioner of the Blockchain Commission for Sustainable Development. Today's presentation we've entitled 10K, the Bitcoin price streak continues. We've actually been in this band for a record amount of time, which is pretty exciting. And we're seeing some really strong market activity today. One of the interesting things that was just announced just a few hours ago is that Jack Dorsey and the Square team will be putting $50 million worth of their balance sheet into crypto. This is a super interesting trend where corporations are now starting to put some of their balance sheet into digital assets. We anticipate that that may continue, and we'll be watching that trend carefully. So without further ado, let's move on. So who's blockchain.com? Blockchain.com is the world's most popular digital currency platform. And we're probably most well known for our wallet. Our wallet is a free tool you can use to send, receive, secure, trade, and exchange digital forms of money. Now, sometimes those are things like cryptocurrencies. They're also things like digital dollars. For the professional traders out there, we have the blockchain.com exchange. We've recently added some new assets there, and we'd love to have you come test it out. We have extremely great banking rails all over the world, so we'd love to have you sign up. The blockchain.com Explorer continues to be a fantastic source for information for developers and anyone who's crypto curious to see what's happening on chain. So when people are talking about economic velocity, frequently they're sourcing that data from the blockchain.com Explorer, and there's a lot of great data and resources available for you there. We have some additional interesting products and features here at blockchain.com, including the ability to collateralize borrowing with your crypto, the fastest way to buy new crypto. Recently launched interest accounts. So basically, it's a feature where you deposit crypto and can actually earn interest via our really fantastic feature set there. And then we also have tools for developers and software programmers all over the world via the blockchain.com API. So please check it out. So what's new at blockchain.com over the last 30 days? We've made a lot of improvements. One of the most important ones is launching a very simple way for first-time crypto curious to purchase crypto via the blockchain.com exchange. We'll show a screenshot of that momentarily. The last few months, we've spent a lot of time during our market overviews talking about decentralized finance. And in order to sort of provide some really interesting opportunities for our community, we've added the Lend and Aave DeFi tokens to the blockchain.com exchange based on popular demand. We've seen a really strong demand for those assets on the exchange, so those are available today. Made a bunch of improvements between the exchange and our wallet features. We've launched USD wallet balances, as well as the ability to sell USD into the wallets, improved locks and a bunch of UX, and launched a DeFi token rankings into the Explorer, so anyone can keep track of what's going on in the decentralized market prices as well. So the team has been tremendously busy, and I think we have more on our plates headed into the last quarter of this year than at any point in time. So we're working hard to make things better for you. And as always, we welcome feedback from our community on how we can always improve the product and services offered. So a quick couple screenshots to show you what we've done. These are the wallets. They've all been updated over the last 2 weeks. So if you haven't done so, please make sure you're running the most current iOS, Android versions of the blockchain.com wallet. Next screen, please. Our interest rates are the best in the crypto space. So if you want to earn some money on your crypto, you can deposit it with blockchain.com. We run an institutional lending operation here, and this is a great way to earn some returns on those things. So please test those things out. We'd love to have you do that. Next. This is a brand new interface we've launched to make it easier for first-time crypto curious to buy some cryptocurrency really quickly. And so you can go to the simple trade feature in the top right corner of your blockchain.com exchange and test it out. We'd love to get your input on that. We heard from a lot of people that the more advanced user experiences were a bit intimidating. So we wanted to have a way for people to get into it and then test out the more complex features at a time that was convenient for them. So please also visit that. And as I mentioned, we focused a lot on the last 2 monthly market recaps on the surge in attention on the DeFi community and specifically decentralized assets. We're very proud to announce that we now support the YFI or YFI token as well as Aave token inside the blockchain.com exchange. So test those things out. And we'd like to thank again our special guest from last month, Anthony Sassano, the author of The Daily Gwei, who's been really instrumental in helping us shape our views on these things. And we thank him for his time. So last time we spoke, we did a market outlook, looked at Bitcoin on-chain insights by looking at what's been going on the blockchain. Garrett presented a significant overview on the financial repression stealth tax, and we had our special guest. We always publish these things online. You can find them on YouTube and on our Facebook channel. So if you didn't catch last month's, you can always go back and find those at any time at your convenience. So without further ado, today's focus, we're going to do another market outlook. We're going to cover on-chain insights. We'll do a deep dive with Charlie McGarraugh, who's the Chief Strategy Officer here at blockchain.com, to look at what's been going on in the markets. And I'm really excited to announce that we have a special guest today, Steve Kokinos. He's the CEO of Algorand, a very exciting cryptocurrency blockchain platform based out of Boston with a global community. We support Algorand and have been a longtime supporter of the work there within the wallet, within the exchange, and really excited to hear about what Algorand has in store over the future and what the roadmap's going to look like, and also kind of look back on the story so far. So really excited to have Steve here, and we'll be bringing him on board in a little bit later. So thank you very much. So without further ado, I'm going to put you in the capable hands of Dr. Garrett Heilman. Dr. Garrett Heilman is the head of research here at blockchain.com and one of the most cited cryptocurrency and blockchain technology researchers. He created and taught the first UK classroom at the University of Cambridge on blockchain technology and has authored leading research on cryptocurrencies, alternative currencies, stablecoins, and broader trends in finance. He's been ranked as one of the 100 most influential economists in the United Kingdom, and he's regularly asked to share his perspectives with leading media organizations, including the FT, BBC, NPR, and many more. So without further ado, I'll pass it on to Garrett. Thank you very much.
Great. Thanks, Nick. So we've got Charlie on later to talk more in depth about the markets, but let's just briefly recap what happened in September. We're looking at this picture here where, crypto was down, stocks were down slightly, gold was down, and we had the dollar and the treasury market up a bit. And you could characterize this as a bit of a risk-off month. Charlie's going to talk a bit more about, kind of the interplay between crypto and some of these, other market segments like equities in particular, and what's happening with that correlation. But the interesting thing from our perspective, I think, is looking at the strength of Bitcoin over the past few months. Despite all the attention that Ethereum and DeFi have received, as Nick mentioned, and what we've titled the theme of this monthly outlook to be, Bitcoin is on its longest streak above 10K, breaking the 60-plus day record set in 2017. If you look also at the year-to-date figures and longer-term performance, crypto is, of course, doing really well. But that strength, even with all the activity in crypto focused on DeFi, funds flowing into DeFi and Ethereum, seeing Bitcoin remain above 10K is certainly very encouraging. As we're in the baseball playoff season here, and we're big fans of streaks, thinking back to Jolton Joe DiMaggio's record-setting 50-plus day hitting streak. We're now up to, I think after today, it'll be 72 days for Bitcoin above 10K, which is well above the 62 day record in 2017. How long this can go is a good question. Earlier this year, we had a number of commentators. Mike Belshi, our friend over at BitGo, thought that Bitcoin was not going to go down below 10K again. He was proven wrong, of course, as if others have been. So we're not going to sit here and tell you that it's impossible that Bitcoin goes below 10K, but the psychology of this number is significant. There is no really robust mechanism for putting a valuation on Bitcoin. And so these levels are significant for market psychology reasons. Charlie maybe can say more about that. But really for Bitcoin to succeed as a new reserve asset, it will at some point need to stay above 10K forever. And we're all hopeful that this is the time it's going to do that. Certainly seeing corporates come in and denominating parts of their balance sheet in Bitcoin Nick mentioned Square doing that. That's huge news. There's certainly a lot more ammunition in the Square Twitter treasury that could be deployed in this direction. And we may see a trend here. This isn't just a one-off with MicroStrategy, clearly. So that could be a big driver for getting Bitcoin above 10K forever. And that's important to Bitcoin succeeding, becoming a new reliable reserve asset. So let's now turn to Bitcoin on-chain insights. Even though the market cap was down this last month, we saw a steady uptick in Bitcoin network activity across the board. We saw a number of payments and transactions slightly increasing, with blockchain.com representing over 30% of all network activity on the Bitcoin network. We saw a recent increase in Bitcoin daily output volumes. Now, most of this is related to funds staying within the same wallet, a single hot wallet, actually, which we highlight over on the right side of the screen. So that's interesting. We've got estimated transaction values remaining stable. And when we look at activity across different regions, we've in the past highlighted country level activity. We thought it'd be interesting to show you what's happening on a regional basis. And in terms of the number of active users in our web wallet, Europe is the most active. We've also seen Africa's share increase steadily by 5%, but that's starting to kind of stabilize. If we actually try to do this on a more per capita basis, because that's an absolute measure we were looking at there, and we look at activity based on number of internet users in a given region, we see that North America is actually the most active region on a per internet user basis. So those are some of the on-chain insights from this month, and we'll be writing more about those in the blog, which will be published here shortly. So now I'd like to turn it over to my colleague, Charlie, here, who's going to talk about markets. And Charlie, feel free to take it away.
Great, thanks a lot. And thanks everyone for having me. So I guess here's this first slide, which shows that in white, you've got the open interest on the CME in Bitcoin futures, which is sort of the kind of institutional vehicle of choice for crossover buyers within the market structure in terms of regulated hedge funds and that kind of thing. And what you can see is that up until roughly August, it kind of went up in line with the gold price, in line with this idea of Bitcoin is this sort of levered digital gold, idea, and isn't this really cool? And what's interesting is that gold's come back, and Bitcoin has delevered its open interest a lot more. So basically, everybody's kind of going like, oh well, if the rally in precious metals and the sell-off in the dollar has slowed down, then Bitcoin, which is like the most aggressive thing I can do, at least versus futures, I think I'll back off a little bit. And so kind of the market's taken a breather on this kind of digital gold narrative and this sort of bearishness on the dollar. And that really shows in the positioning data. Next page. Right, oh, go back one. Yeah, okay, so this page shows basically the realized volatility of Bitcoin. And it shows that basically we had astronomical volatility in March. And now we're basically at the lows, kind of recent memory. So basically the market has gotten really quiet. We think part of this is, ironically, actually due to a pickup in interest in the options market. Crypto is no different than every other asset class. People are looking for yield, and there's a fair amount of option selling that's going on that has sort of constricted the movement of the market. I think it's also a function of the dollar sell-off that kind of predominated earlier this year, just chilling out, with gold standing still and kind of the dollar index not doing very much against other majors. But for whatever reason, the market has calmed down quite a lot. Next page. Here we see basically a basket of different altcoins, Ethereum, Bitcoin Cash and XRP against the Bitcoin price, all indexed to 100 as of the beginning of the year. And what we can see is that Ethereum has really come off a lot from its kind of top tick of sentiment at the beginning of the month of September, but it is still massively outperformed on the year. And so this whole kind of excitement around DeFi, the excitement around ETH 2.0 and scaling, is ETH going to win the smart contract war, or will the sort of second gen protocols where, I'm sure Steve will have something to say about that shortly. Have something else to say about that. But in any case, we are still definitely not reverting back to where we were at the beginning of the year, or God forbid, the lows of March. There's still a fair amount of excitement built up in Ethereum, despite the the reasonably terrible price action in smart contracting platforms and DeFi over the last, call it 4 to 6 weeks. Interestingly, also, cryptos that are more focused on payments like Bitcoin Cash and XRP, it's really just not where the excitement is. The market really right now wants to talk about smart contracting, it wants to talk about derivatives, and it wants to talk about DeFi. Payments, open payment systems for the world, may be less interesting. And digital gold, like I said, has also backed off as kind of a main narrative. Next slide. Right, okay, so on this one, here you can see basically the price of Bitcoin against the NASDAQ ETF, the equity ETF. And, what's sort of shocking about this is that, look, I thought, crypto was supposed to be, an alternative financial system for the world, or at least the internet, and yet it's just trading like a risk-on equity. And that's, I think, been a really notable thing all year, has been basically, is Bitcoin this risk-off digital gold thing, or is it just another risky tech equity? The market is trading like it's another risky tech equity. And I think one of the big questions we should be asking ourselves is sort of, when might that change, and why? Is crypto just, in the digital asset ecosystem really just a risky tech equity play? I'd argue no. I'd say it's a far more substantive thing than just another tech equity. For example, decentralized governance, the looming Web 3.0 explosion, which will, subsume the internet over the next 10 to 20 years. And of course, disintermediating the financial system, all of which, are kind of more than just an idea of, another thing to add to the NASDAQ. And so really the question is, what could catalyze a break in this equity correlation and sort of change the behavior? Will Bitcoin behave like a risk-off asset rather than a risk-on asset again? And so I think the next slide, if you would, kind of illustrates this. So here we have in white 10-year inflation swaps. And this shows basically the traditional financial markets view of what will the price of inflation be? And I've indexed all these things to 100 to get a sense of the relative moves, maybe rightly, maybe wrongly. But I think the point is that with Bitcoin in green and the price of silver in yellow, right? You could argue that those are also assets that should do extremely well in a world of inflation. And the point of putting the white inflation swap up is just to say that with the COVID crisis, the market priced massive, massive, massive deflation. A big wave of recession, a big shock to aggregate demand in the global economy, and the deflationary impulse like that. All that's really happened since then with this sort of huge sell-off in the market and then this massive bounce is we're just back to where we started pre-COVID, which is it's not going to be deflation as far as the eye can see anymore. We're just back to sort of steady state as she goes. But what we haven't seen really is any kind of breakout to the top side of inflation. Now, we have seen that in inflation-linked related assets like Bitcoin and like silver, which you can see with that kind of gap higher in July. And so I think the market is waiting to see some validation from the larger fixed income markets before taking the really racy, heavily geared toward inflation assets that are much smaller in their market cap and much more sensitive to speculative flows like Bitcoin and silver, and basically put a much more inflation expectation into that. But do I think that could happen? I definitely think that could happen because at the end of the election, right, in the US, it seems like the policymakers, are kind of number one competing to see who can be more hawkish on China, which has a pretty big supply side impact to the global supply chain and could have an impact on supply-driven inflation. And then they're also going to compete to see who can spend more money on the fiscal side with various forms of stimulus and sort of populist, kind of activity, funded by the central bank. So I suspect, and this is just my own view, and it's in no way a guarantee of future performance, but if I had to bet, I would bet that after the election, inflation expectations start to pick up again, both from a demand side stimulus, perspective, and from a supply side hawkish on China, let's shock the global supply chain type perspective. And if that were to be the case, what I would expect is equities would do poorly, and inflation-linked, kind of quasi risk-off assets like Bitcoin, gold, and potentially silver should outperform. pretty meaningfully. So that's kind of what we're looking for kind of after the election and through, whatever transition phase is necessary to get the new regime in place or continue the old regime. But once that's done, I think that the way is pretty clear for another inflationary impulse kind of in the first half of next year, which should drive the market higher, if I had to guess. That's it for me, and thank you very much.
Great, thanks, Charlie. Okay, so we're going to stop sharing the screen now because we're going to bring on our special guest from Algorand, Steve Kokinos. Am I getting that right? Help us with the pronunciation.
No, you got it. It's perfect. No, thanks for having me.
Excellent. Well, Nick already introduced you, so just with the time we have, we'd love to jump into more about you and Algorand, and maybe it's always fun to hear with newcomers kind of how they first got involved with crypto and blockchain. Can you tell us your story before you get to Algorand?
Yeah, so I'm a serial entrepreneur, and I started my first business when I was 19, when I was still in college, and it was mid 90s to date myself. So really early days of the internet, and that was a fascinating time for sure. And built several companies and helped take them public or sell them, and ran a company called Fuse for about 10 years before this. And I'd had several friends who were early Bitcoin miners who had been encouraging me to sort of check it out and get involved, but just didn't really have any time. And I guess sort of end of 16, early 17, had more time on my hands and started looking into it, and found that it was really fascinating, both technically and, just to get familiarized. I set up some miners with my kids in our basement, and, we started just understanding how everything worked. But what really excited me was that, it was the first thing I had seen in 20 years that had the same level of dynamism and had some of the same philosophical underpinnings as were there kind of in the early days of the internet, especially around decentralization and really inclusion. In this case, financial. In the early days of the internet, it was more about giving people the power to sort of publish their own ideas versus having to rely on big media. And so as I started to look into it more, I had been talking to Pillar, which is a Boston-based VC, and Union Square Ventures, and ultimately was introduced to Silvio Mccauley, and found Silvio both to be brilliant, but also had really fascinating ideas on how to evolve the system. And I think what he saw was that Bitcoin was really innovative and an amazing use of both cryptography and distributed computer science, but also had challenges as a first generation tech that needed to be overcome if you were going to really scale to everyone in the world using digital money. And so kind of discussions moved from there. And so I obviously I think I was pretty lucky to be introduced to a guy like Silvio along my journey of just sort of learning about the tech and understanding, but things sort of developed from there. So that's really how I got into it. But it's been an adventure for sure since then.
For those that don't know who Silvio Mccauley is, Steve, can you just give us a quick rundown on his bio, as he is one of the most prominent and important cryptographers, mathematicians of his cohort?
For sure, and I would encourage anybody here to go look up Silvio. He is by all accounts one of the founders of modern cryptography. He's a winner of the Turing Prize, which is the sort of highest honor in computer science, and contributed to many of the cryptographic primitives that help secure the internet and banking systems, but also is specifically the inventor of zero knowledge proofs and verifiable random functions, both of which are used broadly in many different blockchain approaches. So very interesting person. Has been a longtime professor at MIT and really helped create their cryptography practice in the computer science department or cryptography department. And I think more than that, I think a lot of the sort of innovations and a lot of the people who are big contributors in the cryptographic field were either students of his or have collaborated with him along the way. So it's definitely he's an influential figure in that world.
Thanks, Steve. So I'll take the first question. I know Garrett has a bunch of them, so I'll let him follow up. But just for everyone's introduction to it, in your own words, can you please describe, what what is the fit to purpose, sort of vision for Algorand, and how does it kind of fit between Bitcoin, Ethereum, and maybe some of the newer other cryptocurrency protocol projects? So yeah, give us sort of the layman's overview of what is Algorand working toward achieving.
Sure. So I'd say at the most basic level, Algorand is a ground up effort. So it's entirely new technology. It is both a consensus protocol and a smart contract platform. And I'll explain how we approach that. That's a little bit different. One of the unique attributes of Algorand is that the consensus protocol, instead of being proof of work like Bitcoin or Ethereum, is proof of stake, but it's a particular form of proof of stake that we call pure proof of stake. And really what that means is that instead of miners controlling the network, it's actually the users that contribute to the security and consensus of the network. And every user can be called on at random to propose a block. Every user can be called on at random to validate a block. And as a result of how that effectively lottery works, it means that nobody knows who the next block proposer will be, and nobody knows who'll be involved in confirming a block. And the validation is actually passed along with the block. And so really one of the goals of Algorand is to be able to have consensus run effectively as fast as possible. And today it takes about 4 seconds to confirm a block. All blocks are immediately final. And we can handle about 1,000 transactions per second. And that will be increasing over time. We're going to be announcing several performance steps to the protocol soon. But the idea also is that as you scale, if you scale to hundreds of millions or billions of users over time, Algorand's performance characteristics always stay the same and doesn't require additional compute. It doesn't require power consumption. And so it's also very efficient from a resource utilization standpoint. So that's at the basic, kind of basic level. What Silvio really sought out to do with the protocol is solve this sort of so-called blockchain trilemma, where you could pick two out of scalability, security, and decentralization. He felt that they could all be solved, but really it just required novel approaches to solve some old computer science problems, like form a new form of Byzantine agreement and other things. I would encourage anybody to go. Silvio has many videos explaining simply how the protocol works, and for anyone who's interested, please go check that out. The second part is, we've spent a lot of time thinking about how you need to operate at scale and how people use smart contracts and other primitives. And so subsequent to launch, we've rolled out several protocol upgrades. One created what we call ASAs, which are Algorand standard assets, the ability to create any form of asset that you'd like. We have atomic transfers, the ability to atomically swap either one asset, one party, or multi-asset, multi-party. And then we have a layer 1 smart contract language that allows for both stateless and stateful smart contracts. And so I think in one of the things that's different about Algorand is that everything that we've done is in layer 1. Everything takes on the safety and security of the protocol itself. And I think what that means in simple terms is that as people look to do things like have programmable money, doing that at scale, being able to execute transactions very fast is important. In Algorand, smart contracts run at the same speed as a simple transaction. There's no performance penalty for using any of the features. And we think that as you start to get to scale of hundreds of millions of users to countries wanting to deploy digital money, those are the kinds of things that are necessary. You need an approach that's both very secure and performs well as you scale to many users.
Thanks, Steve. Garrett?
Great. Steve, love to jump into the topic of governance. There's a kind of running joke in the Bitcoin space, as you may have run across the lack of the CEO of Bitcoin, various references to that and the lack thereof. You hold the title of CEO. Can you talk us through about Algorand's governance, your role in that and the different structures that help govern the whole community in technology?
Yeah, sure. I mean, I think there's certainly a lot of different approaches that that people have looked at. At Algorand, it's actually pretty simple. So I'm actually the CEO of Algorand Inc. We're a US-based company, and Algorand Inc. is the core developer of the Algorand protocol, or one of the core developers. And we're really focused on ongoing innovation in the blockchain space. If you look at the way the company is set up, Silvio manages our research organization, published dozens of papers post-launch. So we're always looking at ways that we can innovate, we can contribute to standards, and then always looking to enhance the protocol and also look at ways we can bring new tools that people might find useful to the market. Definitely the focus on layer one, not trying to, we're not trying to boil the ocean. We're trying to take on kind of hard challenges and roll those out. I think secondly, if you look, I think, Silvio is really the kind of spiritual leader of the Algorand community, and more broadly, very influential in cryptography. And so I think when we also think that there's a role to be sort of an early curator and also just help educate new people coming into the market. I think one of the things that we feel really strongly about is that while there's a vibrant community in crypto today, it's small. Even just looking at developers, there's only 100,000 or so developers that build blockchain and crypto solutions today, but there's 20 million that don't. And so I think there's a lot of scope to go encourage new people to come in and participate in the community and really grow it and encourage mainstream applications to show up with tens or hundreds of millions of users. So that's a focus that we have. The Algorand network, i.e. the public permissionless blockchain, is governed loosely by the Algorand Foundation. They're responsible for for that end of things. And so really Algorand Inc. is a technology company, and we're focused on kind of innovation and building. And the Algorand Foundation, which is based in Singapore, is responsible for early governance of the network, although over time the network will govern itself.
Great, thanks for that. One of the things that Algorand's doing right now is solving scalability issues around stablecoins. We've seen network fees on Ethereum go through the roof, and Circle and USD Coin started operating on top of the Algorand network. Love to hear more of about solving that scalability problem right now for coins like the stable coins that are seeing massive growth. And also, if you don't mind, from a user experience perspective, because we're at blockchain.com super focused on user experience, just thinking through about how a USD coin now is on multiple blockchains, on Ethereum, on Algorand, how that plays for users, and what is kind of the optimal kind of end state if the current situation is suboptimal from a user experience perspective, and trying to make crypto as simple as possible.
Yeah, well, so why don't I take the second part first, and then I'll loop back around on the first. We think that user experiences are incredibly important, and I think it goes back to what I just said a minute ago, which is really we need to think about one, how to encourage more developers to come, and so I think that means we need much simpler developer experiences. One of the things we've focused quite a bit on is having how-tos and kind of easy guides for people to follow, code examples, but also just creating libraries and SDKs that are for the languages that people already use. We think that there's sort of a minimum that people want to actually have to learn that's new, and that right now all of the plumbing that people have to learn in crypto is just much too complicated for people that are looking to come and really just build applications that work for their end users. So I think that's one end. On the other side of it, we definitely are excited that USDC and other stable coins like Tether have decided to deploy on Algorand. We think having native stable coins and a variety of assets enhances the value for anybody who's creating applications. And I can give kind of a quick example. Republic has recently deployed on Algorand as well. They have a regulated security token that they use for crowdfunding, but they actually pay out dividends to their users in USDC. And so based on your holding of the Republic security token, this is all done natively on chain. They have smart contracts will then pay you out in USDC. And so we think that that's the kind of application that having stable coins on chain is a real enabler for. Now, I think certainly, right now, the fact that different assets are starting to live on different chains can be complicated. I think it's really the developers and the end user applications that have to really take care of that simplicity for people. And so the second part to your question, which I think is linked to the first part of the question, is that we think that both developer experiences and end user experiences have to improve a lot. And I know you guys are, philosophically on the same page at blockchain.com and making it like really great for people. But I think there needs to be more and more of that. And the way we think about a blockchain like Algorand is that, really blockchains need to become a public utility, just like the internet is, or electricity is, or water is. And that more and more, as developers start to get more comfortable, we think that a platform like Algorand would be more of a sort of a decentralized resource that people use, but akin to something like AWS in the way that when you fire up Netflix and watch a show, they're relying on AWS in the back end. There's an AWS advertisement in Netflix, so the end user need not know that. And so I think it's very important that we give the right tools to developers, but then also the people building applications really think about the end user experience and make sure that they're using decentralized tools in a way that benefits the end user, but not necessarily sharing the complexity of what's going on behind the scenes with them.
Thanks. I had a question for you, Steve. And Garrett's done a lot of research over the last few years around studying the heuristics and the specifics of different network activities. It's partially to create a dialogue around what are we supposed to be looking for on these public ledger tools, whether it's total transactional volume, economic velocity, the actual economics of the distribution of the coins, these things. So from your perspective, what are the core network transactional metrics that you think matter for Algorand, and what are you looking for in terms of trying to drive those in a positive direction? What should we be looking for?
Yeah, well, so first, I'll just encourage everyone to stay tuned. We're going to be publishing, we're going to have a stats dashboard that we publish ourselves to help people understand what's going on chain. I think one of the problems is that it's a little bit of a apples and oranges comparison that tends to happen between chains and across chains, and that can be whether it comes to performance, where many people claim performance, but a lot of them made shortcuts around decentralization, we focused a lot on decentralization. So I think there's different ways that need to be thought about it. And I think that ultimately there needs to be a standard view on some of this stuff. But I think to just answer your question simply, I think there's no one simple answer, but we think transactional volume, number of wallets on chain, number of active wallets, also things like transactions per second that people are seeing is important, but separately, also economic activity is important as well, but it can be quite a bit harder to understand. And I think it's definitely the case that there are dApps that drive a lot of transactional volume, but not necessarily a lot of economic activity. And then there's separate applications that have, very low transactional volume, but might be high value in terms of each transaction. And so you need to kind of weigh all of those things. But I think from our standpoint, just looking at sort of growth trends is important. And if you look, at Algorand, we have around 6 million wallets that have been created today. Those are largely derived from, a number of different dApps that have deployed on the platform, and some of the stable coins and others that are live. And so, we're continuing to track that. But I think you need to sort of look at, each chain, look at the characteristics, and, just look at not only like absolute numbers, but what are the trends in terms of, does it look like there's more usage happening? Is it growing? For us, seeing new applications deploy on chain is something that we get really excited about. And so we've been happy to see that as well.
It's a super important reminder for first-time crypto curious when they're looking at different, protocols that not all of them are made equally, and it is difficult to compare them sometimes. So it does require, I think, significant study. Garrett, why don't you ask the next one?
Yeah, no, thanks for asking that question, Nick. And yeah, just to add on to that, I think this is a real area that we all need to work together as an industry on to get, also just kind of reliable metrics as well. It's still, possible to game, metrics. And so there's a challenge there, potentially, especially with, networks that have very low transaction fees, of course, and where there isn't that friction built in economically. But I appreciate the work you guys are doing there, Steve, to highlight more of the key stats. I look forward to seeing that. I wanted to if you don't mind, go back in time a little bit. And this gets into the questions around the importance of community and brand and kind of building moats around networks, and talk about the launch of Algorand, and just kind of looking back now, what's your perspective on how that was managed? There's been a lot of discussion in the DeFi space this summer about fair launches. What is a fair launch? How do we define that? And so on. I'd love to hear your perspective on sitting here now in October 2020, with hindsight, about the Algorand launch, how that was managed. How happy are you here today? What is the legacy of kind of how launches are conducted in terms of the brand, the community? And I think everyone recognizes that's a really important part of kind of building a moat, building a growing, healthy blockchain network. But how does the launch play into that? What are your thoughts on how Algorand conducted its launch?
Well, I think the launch generated a lot of interest for sure. We tried a novel auction format, at the time. Look, I think there were pros and cons to doing it that way. I think, at the same time, obviously we weren't, this wasn't like a Bitcoin style launch where, there were no stakeholders. And, I think there were definitely some challenges that had to get worked through early on. I think at the same time, sometimes, I'd say we want to be seen as a project that's, willing to try new things and that's going to continue to innovate. And I think that we've definitely done that. I think if you look today, fast forward to 15 months later, there's over 400 companies or projects that we know about that are building on top of the Algorand network. We've had, several hundred assets launched. We're seeing, a lot of interesting traction out there. We're seeing very healthy growth in terms of adoption on the network and users being added. So I think from all those standpoints, like more traditional metrics, definitely, I think we're excited about that. We're also seeing in terms of our share of voice across the crypto community that continue to grow. And I think one of the things that we also had to deal with that was a little bit lesser known is that, when you're launching the first public permissionless network, making sure that there's enough tokens online and there's participants in the network has to happen kind of at launch, and there has to be a bootstrapping process. And so we definitely put a high priority on security. And I think that sort of further complicated things. On the flip side, we've had no network stalls. Our network has been completely reliable. Even as we've added transactional load, those characteristics haven't changed at all. And I think people are starting to notice that in the community. So, look, I think we've got some things right. We've got some things wrong. I think that's true of every project. And I think we definitely have worked with the community to try to correct problems where they exist. And at the same time, I think what we've found is that there's a lot of receptivity and a lot of sort of latent demand in the market for projects that had to deploy, say, in a permissioned way because there was simply no way to get the scalability they needed. And, I think that's what excites us is that we're definitely seeing signs of mainstream adoption starting to happen. And I think that, we feel really excited that the fact that we got out, we have a, year and a half of track record now and performance of the network. I think that really helps. The other is, and I think this is one thing Algorand is really known for, is both consistent innovation. We've put out probably more innovation and forward-looking research in the past year and a half since launch than we did, prior to launch. And we've also had, 3 meaningful upgrades to the protocol since then, all of which I think are pretty universally viewed as being high quality and very good computer science work. So I think in terms of our focus, it's to just continue to do the things that we know well and do an excellent job of, and let the community take advantage of the tech and build other tools and things around it and kind of help the network grow. And that's going to continue to be what we focus on going forward is really kind of core tech and working with the community to kind of do other stuff. So so far I think we're really happy with how things have progressed. But yeah, I mean, it's listen, anybody who's launched a protocol, a public protocol, knows it's an adventure, and the crypto markets are very dynamic, and I think all those things kind of play into it. But our goal also is to get out and be one of the early next gen chains that hit the market, and to be able to build up some credibility for, kind of the tech and the way it performed. And I think, so far so good as far as that stuff goes.
Great. Thanks so much for sharing that perspective. And yeah, 100% agree. There is no like well-defined playbook here. We're all learning, groping, experimenting, and as we go here. I've got a few more questions, Nick, if that sounds good, that I could.
Yeah, I think I've got one more. I've got one more, but it's probably like a good summary wrap-up one. So maybe I'll let you go next.
But we've been talking about stablecoins. Steve, I'd love to hear your perspective on central bank digital currency. Brian Brooks offered some comments yesterday at LA Blockchain Summit. I presented there as well. Hot topic. U.S. digital dollar. We've had the Fed. You're in Boston. Recently partner up with the MIT Digital Currency Initiative. Can you talk through about how you and Algorand are involved with various central bank digital currency initiatives, and just give us your perspective on that whole subject?
Sure. Well, I think the central bank digital currency discussion in general is a fascinating topic. And for those who don't know, that's definitely an area of interest for Algorand. We announced earlier this year that the Marshall Islands is going to be deploying their national currency on Algorand. So we're really excited to work with them on that. I think it's certainly one of the first central bank digital currencies to emerge. At the same time, we're seeing a big upswing in interest from many different countries on deploying, digital currency. And I think there's a few drivers behind that. One, I think China for sure is taking a leadership position in terms of moving quickly to launch a large scale central bank digital currency. And I think more broadly is really leaning into blockchain as a country. And I think that's very interesting. And on that note, Algorand is one of, I believe, 5 public blockchains that's part of the BSN, which is approved blockchain for China. And so there'll be public Algorand network in China that people will be able to use. And so we think that that's a real positive development. The second, though, on sort of central bank currencies is that I think in the current sort of world environment, there's sort of a question of whether people should be really handling physical money. And I think that a lot of people are really deciding that that's maybe not such a good idea going forward. And then I think, separately, there's many countries for which access to decentralized networks and new forms of financial services could really improve prosperity for their people. And so I think that that's being looked at a lot. And now at the same time, I think what gets us excited at Algorand is also that, when you look at the designs that Silvio and our research team work on, they spend a lot of time thinking about both scale, but also, long running tools and being a sort of software that stands the test of time. And I think when you look at it from the perspective of, a country like, let's take the US or others, they have to think on very long time horizons. Will this tech be secure not only today, but will be secure in 100 years or 50 years? And so really thinking about those things. And I think that's something that our researchers have been focused on a lot. But I think definitely it's more now a point of when central bank digital currencies are coming, not if. And I think that's shifted a lot over the past year or so, from people who are more experimenting to now we're seeing central banks getting more aggressive about it. And I think that one of the interesting things that we've learned from our discussions is that I think central banks really value transparency and would like to be more flexible in the market than just interacting with banks. Now, maybe not interacting with every single person in a country, but being able to sort of expand the scope of their services and be more inclusive even in their world is interesting. So I think that definitely there's different models. Some are retail central bank currencies that end users would use. Others are more bank-to-bank central bank digital currencies that would be more of a way of creating simpler lending opportunities and clearing. We'll see how it all shakes out. But definitely I think it's very interesting, and I think we've been really happy also to see the detail and our attention to detail that many different people are taking in terms of really understanding the technology before they would potentially deploy it to a country.
Great, thanks for that. Nick, do I have time for one more before you wrap it up with your last question?
Yeah.
Okay, cool. So the proverbial Ethereum killer question, of course, your perspective on just, looking ahead. We've got a lot of work, as you mentioned, to do in terms of bringing, more users into the space. We have millions, but certainly not billions. But looking ahead, do you see a world where there's a relatively small number of kind of dominant blockchains, networks that are in use, not a massive number? And if yes, how does Algorand win and compete against kind of blockchain networks like Ethereum that have a huge head start in terms of community, network effects, dApps, et cetera? Just give us your standard how we win kind of spiel here.
Yeah, well, I think it's sort of a combination of different things that you mentioned. I think first of all, there's no major tech wave that has ever happened that led to a single technology being the only thing that people use. And so I don't think it's likely here that we're talking going to be one chain or one technology. I think it will be a collection of chains that are each probably used for slightly different things. I think in terms of, if you take Bitcoin as an example, I think it's clearly established itself as the reserve currency of the crypto space. And I don't see that changing. I think on the Ethereum side, Ethereum has created a lot of innovation. Obviously, it's a fascinating place right now on the DeFi front. But I think as you start to look at some of these, larger scale applications that we've been talking about, whether it's, retail applications for stablecoins or central bank currencies or others, I think there's just a simple fact that, Ethereum simply can't scale to handle those users. It's congested, even with sort of the tens of thousands of users that are on there every day today, performing DeFi transactions. And so I think there's a sort of a simple reality that if blockchains or blockchain users are going to scale to hundreds of millions or billions of users, they need platforms like Algorand to simply be able to accommodate those users and that transactional volume. And I think that's where we've simply taken a different approach, where when you think about programmable money, transactions, even if they're more complex, have to run at the speed of the chain, has to support, be able to support hundreds of millions of users, and needs to do that in a way that isn't generating enormous transaction fees, because otherwise it simply won't work. I think when you think about blockchain making the world more efficient and making it easier for people to transact and participate, it can't cost lots of money per transaction for that to happen. And so I think Ethereum has a very vibrant community. There's a lot of invention and interesting things going on there. I think the DeFi developments and sort of what that means for governance and other things are very, very interesting. But at the same time, I think the blockchain community and the crypto community needs to grow by adding users, and that means more developers, more users, and you need to be able to accommodate them and actually be able to scale to support those applications. And I think at Algorand, that's what we're really focused on, is when people have high scale applications they want to deploy, they want to create things like programmable money and financial products and be able to do that in a way that's secure and always inexpensive for them to do, where they have predictability. We can really be that platform. And I think there's a gap in the market that needs to be filled, and that'll help the whole market grow. It's not obviating the need for platforms like Ethereum or Bitcoin, but I definitely think there is more needed in the market than has existed up until now. So, we're excited to kind of, continue to establish ourselves. We're starting to see, great user growth on the network, and, excited to watch what people build.
Thanks, Steve. All right, so what can we look forward to that you're excited about that you can share with us, in the near-term roadmap that you guys have been concentrating on? So give us maybe a peek over the horizon on what the team over has been focused on.
Yeah, so there's a few different things that are on our near-term roadmap that we're really excited about all of them. I think they're going to be great. One is, and we'll be sharing more about this soon, we're going to be building a permissionless token bridging system that will allow people to move assets on and off of Algorand. And we think that interoperability in general is a big theme. And so we've really been focused on thinking about how you do that in a decentralized way. And even though people need to work between chains, there needs to be a way of doing that without having to rely on centralized parties. So that's one area we'll be sharing more about. Second is we think performance is something that always needs to be improved. We expect to move. Today Algorand runs at about 1100 TPS. We'll be moving that to something probably closer to 10,000 by the beginning of the year. So we're going to be announcing more on how we're doing that soon. We think that keeping performance as sort of a non-issue is important. And so we want to be way out ahead of that. So I think that's second step. And as we've done with everything else, those enhancements will be done without sacrificing decentralization, without sacrificing finality or anything else. And we'll probably actually come with the network running faster than it is today. So we're excited about that for sure. And then, moving forward from there, we announced recently our collaboration with Blockstack on Clarity, which is a smart contract language. We think in pursuit of creating simpler and simpler experiences, while our layer 1 smart contracts are useful in many cases, there are also longer running applications and applications that require more compute. And we think that that's going to be a good way forward. And so we already published a research paper on our layer 2 smart contracts. That's something that we're actively working on as well, and expect to see coming out soon. And I think all of those things together, we think ultimately will make for a very easy development experience for people who want to come and build any sort of blockchain or Web3 application.
Great, thanks, Steve, and appreciate your team's hard work on all this stuff. Increasing transactions per second is something almost everyone on all chains would like to see more of. So thank you very much. And we're keen to watch that partnership with Blockstacks come to fruition as well. We ran a large airdrop program with that team earlier this year, and are huge supporters of the work that they're concentrating on. So without further ado, we're coming up on an hour here. So really want to special thanks to Steve for coming and giving us his views on the complexities of launching a cryptocurrency public blockchain project from 0 to 60, and pretty significant progress you guys have made as a community over the last year. So thanks for everything. Garrett, Charlie, the rest of the team at blockchain.com, thank you guys so much. I'll give you parting words. Steve?
Yeah, well, thank you guys so much for having me. We really appreciate the support, and thanks for everyone for tuning in. We'll look forward to sharing more with everyone soon.
Great. All right. Thanks, everyone. Have a wonderful evening or a good day to you, wherever you are.